Hey everybody, this is Dr. Duru from Ahan Analytics with the Market Breadth. I am going to do a quick roundup of all the stocks over the last, I think, 2 months or so that I have done very quick shorts on, giving you an update. As a reminder, I provide all this information for educational purposes. Please use your own risk tolerance and risk preferences and investing and trading horizons for, as suited to you. I am doing this review because I know I've done a lot of these and haven't given status updates on all of these trades. And I also just want to let you know where I stand. I do not I don't make it a practice to do live updates on these positions or talk about them every day or every week. So I just put this information out there as things for you to consider. Again, for educational purposes, use as you shall, and just know that at any time I may buy or sell any of these positions, whether it's stocks or options or related trades. Okay. All right. So let's do a quick update. Tesla was the first one I believe I did. This was a while back. And actually, I ended up having to do several because Tesla was all over the place. You can review those shorts to see my point, but I just wanted to give a quick update on where we are now. Let me make sure I'm in logarithmic mode. And you can see here that I had the wrong perspective when Elon Musk went after Trump, and the stock ended up dropping 14.3% once Trump came back, basically clapped back in this rap battle that they had. Given what we just went through with the tariff trauma, drama, and noise, that all of that was, for nothing. Basically, at the flip of a switch, all of the risks just went away. The same thing applied in this case. All it would take is a flip of the switch, and all the risk dissipates, and that's exactly what happened. I believe Elon was the first to extend an olive branch. I'm still not clear whether the olive branch has been fully accepted, but that's all it took to just flip the script on this one. And that's the perspective I should have had, which is, hey, what would be the case for buying into this latest drama? And sure enough, you can see Tesla gapped up the next day, 3.7% above the 50-day moving average for those. So for those who are buyers or fans or bulls of Tesla, that was a sign to get back in, just plain and simple. And that would have worked. All the way up until now, the bears are probably licking their chops again because notice how at this 20-day moving average resistance, which is the dotted line, Tesla failed to break above it and it actually hit and came down, hit and came down. And today it was down another 3.9%. So, from my perspective, it's just Tesla's right back into no man's land. And if I were inclined, I wouldn't short or buy it here. I would wait for a breakout above the 20-day moving average resistance, or to short it, I would wait for the next breakdown below the 50-day moving average, all depending upon the news, of course. As I said, we're in this era, this mode where single people can say something and the stock is going to fly off the handles, whether it's up or down, and then the very next day the switch is flipped. And so we just have to keep that stuff in mind. Okay. Netflix is another one. I did a quick short. Sorry, I can't remember. I think it was back here in mid-May when Trump threatened to yeah, I think it was here, May 12th. Trump threatened to charge tariffs on films made outside of the US. It was like Netflix sold off immediately. It dropped actually only 2.7%, which I think was the proper reaction, given again, we had just seen what had happened in the false tariff noise, the false tariff drama earlier. And sure enough, Netflix turned right around the next day. I don't even know whether the tariffs on foreign films is still on the table. But the market clearly doesn't care, or at least concluded it's not going to impact Netflix. So again, I had the wrong perspective. I should have been thinking, okay, under what condition would I buy into that dip and that bad news? And actually, that condition happened right away the next day. 20-day moving average held support, close enough, and Netflix turned around and closed above even the intraday high of that day. And you can see here Netflix was off to the races, set new all-time highs, and it's still holding 20-day moving average support even in these last several trading days. Okay, Palantir. This is one where I was just giving out some notes. I didn't make a trade at that time. I do have a trade in Palantir now. It's a call spread that expires Friday. It's looking kind of tenuous right now. But back when I did the short on Palantir, there was like this double top that had formed right here, and it looked like the double top was confirmed with this 12.1% post earnings drop. I warned the bears that yes, it's a confirmed double top, but if Palantir makes a new all-time high, you have to admit that the trade was bad. And look at this. I mean, Palantir turned right around and went straight up to a new all-time high. So it didn't take long to prove that this double top was a false red flag. But interestingly, Palantir struggled to make any additional upward momentum until the end of May. Another marginal new high, but then it dropped right back down. In fact, below this important line, which marked the former double top, but then it bounced right back up. So once I saw this rebound, I decided to finally chase Palantir a little bit with that call spread on the breakout to all-time high. All right, let's move on. CRDO was my big winner. I'm very proud of this one with a big footnote, which is, and I won't talk about the setup. I mean, you could probably tell by my label what the setup was. I chickened out ahead of earnings. This stock went up about at least 22% before settling on a 15% post earnings gain. And then I also was waiting to see if it would hold this 20-day moving average support, which is the dotted line. It didn't get close enough to trigger a buy for me, and then the stock turned right around again. So I missed out big. I mean, I got a good profit. This is actually, I think, the best trade of all the shorts that I did. But I could have, and I should still be sitting in some more gains now. Actually, not should, because I did follow my rules. So congratulations to any of you who were brave enough to sit through earnings, and more kudos to any of you who were quick to buy into this pullback. I'm still bullish on this stock, but I just, according to my own trading rules and investing rules, I just can't chase it at this point. All right, so next in the timeline is First Solar. First Solar, I talked about how technicals kept me out of a losing position and getting faked out by this 200-day moving average breakout. This is a very bizarre one because it seems like we've known for months that these green energy tax credits were going to go away. It's just a matter of time and how. But I couldn't resist because I have First Solar on my contrarian list. Like in another year or two, I definitely want to be buying some of these stocks, but I couldn't resist. It tested the 20-day moving average support. You're going to hear this theme over and over again. And I got a call spread. And then I think the next day or 2 days later, boom, the stock resumed selling 5.3%. But then somehow someone flipped the switch the next day and it recovered all of those losses and then some. So after another day or two of gains, I decided just to get out, take my profits. I don't quite understand why the stock is acting the way it is, and continued to rally right into 200-day moving average resistance, which is, I'm sure, where all the solar bulls, First Solar bears, jumped back in the stock, and they got rewarded big time today because the green energy tax credits were officially cut, or at least the Senate confirmed it wants it cut in the budget bill, and it lost 18%. First Solar is is in deep bearish position under the 50-day moving average. So I definitely don't want to short First Solar. I'm not a bear on these stocks, but I'm not buying it here. So I'm back to, I think, my regularly scheduled plan, which is to take a look at these stocks in another year or two as a major contrarian play. All right, so this pharmaceutical stock, not SanDisk, SNDX, Syndax is a disappointing one, and it's kind of strange because I went all in on. I love buying after insiders buy stocks, even in speculative ones like Syndax, and it went well for a day or two, and then it dropped, and I thought, oh my goodness, I'm already being proven wrong. It plunged 9%. I lost all of my gains, but then the stock dribbled itself back up. Now, if you watch that short, you'll remember my caution that the first test of this trade was going to be 50-day moving average resistance, which is this red line. And because it's trending down, you have to take this very seriously. And sure enough, the sellers showed up and the stock hasn't been the same since. And in fact, it's at its lowest point since we got the news that insiders bought. So now I'm even more concerned that this trade is just going to fail. I'm going to hold in. The gap hasn't filled yet from May 20th. But if it breaks down below this low, I'm most likely just going to have to bail because it tells me, hey, something is not right. I may not know what it is, but I don't want to be around waiting to find out what it is that suddenly has the market turning its opinion. Okay, so hopefully my trading rules are that I use are becoming clearer and clearer with all these examples and follow-ups. Now, Domo is an example where I did end up chasing. I did a short, lamenting how I missed this stock, even though I've become a big fan of this, both the stock and the company's product. And I decided, you know what, I just can't keep watching this thing go up and up and up and up. So I bought a very low risk position. I bought 100, just 100 shares. I sold a call against that at the 1250 strike. So it's a covered call position. Even though the potential profits are very small, I just wanted to have that position in place so I could keep this stock top of mind and not forget about it. And now I'm actually eagerly awaiting a test of the 20-day moving average support. If this holds, meaning the stock taps it and then bounces up and makes at least one close higher, if not two closes higher, I'm just going to go all in on the stock. If this doesn't hold, then I'm gonna be even more excited again, based depending upon the news, at the prospect of it testing the 50-day moving average support, which looks like it's on track to hit $10 if this um, pullback continues. And $10 is convenient because that's the previous high, which I presumed would be support for a post-earnings pullback that never happened. Okay, so for those of you who happen to be long Domo, don't worry. I'm not wishing or hoping the stock goes down that low. I'm just saying that if it goes down that low, all else being equal, I'm going to join you in this stock. Okay. All right. Uber. This is another one where it looked good. Actually, the important thing here was I couldn't wait until it officially tested the support line. I went in and jumped in, and it looked like it was a great decision because the next day, sorry, a great outcome because the next day it jumped 1.1%. And then it continued higher. It even broke out at the first resistance point, but unfortunately, it didn't break out above, guess what? The 20-day moving average resistance. And sellers have taken over ever since then. Most of my gains are gone. I'm still holding on to some. And because I had at least a July horizon on this, I'm trying to hold out. Hopefully, if it continues to pull back, the 50-day moving average will hold as support, but we'll see. All right, let's move on to Intuitive Surgical. This is one where an analyst slammed what was a great trade that I was looking forward to gaining more on, and in fact, having the stock go higher to test and break into new all-time highs. This analyst had a different idea in mind, downgraded it, and the stock actually encouragingly jumped right back above the 200-day moving average um, support line, but now the sellers have taken over again and the stock has dribbled down. So now I'm facing a very big decision with most of my gains gone from this trade, whether I'm going to just stop loss if the stock closes below the low of this day when it was downgraded. I probably will, because again, I like to defer to technicals. And if that new low is made, that tells me that the market at least thinks that this downgrade is a serious matter to keep in mind, and that something could be coming down the pipe later on of big concern. All right, so that's where I stand there. In terms of bull, bear, technicals, Intuitive Surgical is clearly bearish because it's below the converged 200-day moving average and 50-day moving average lines. All right, finally, here's a stock that I was really proud of, Novo Nordisk. I called the bearish to bullish reversal. I got in the stock about a day or two ahead of a big jump, a big 5% jump on news that an activist hedge fund had bought a significant share. It looked good for another 2 days, and then the sellers have taken over the last 3 days. Now, I'm sticking to my bearish to bullish reversal. So I am going to buy pullbacks to support. So guess what? The 20-day moving average is the first thing to look at, and then the 50-day moving average support. I am going to buy whatever support ends up holding up and gets tested successfully. Now, I can't be stubbornly bullish. So where would I stop out? I probably would stop out on a 50-day moving average breakout and a close below this previous low. Again, why would I stop out there? Because that tells me that the previous thesis that I had may be on its way to getting proven wrong. And I don't want to wait around to find out how or why it's wrong. I want to be out of the position and just watch and wait. So that's the condition for that stock. If you have any questions or feedback, just put them down below. I always appreciate likes and shares because that tells the algorithms what's up. Subscribe to the channel, punch that bell icon so you can get real-time notifications when I post this new content. I will conclude with just a quick look at where we are now, because one of the reasons why I wanted to go into this review was that things have dramatically changed in the market, the overall stock market, because of geopolitical risks. Tensions have escalated between Israel and Iran, and we don't know how big and bad this is going to get. You can see my favorite technical indicator, the percentage of stocks trading above the 50-day moving averages, or the AT50, has now closed twice below, actually, essentially three times below the overbought threshold at 70%. For the AT50 trading rules, this is bearish. And again, I just keep reminding you that I'm not flipping bearish because the indices are still well supported. And I won't go into all of that now. You can check out a previous video to get more or a previous short. But just know that it's important that after all of the review I just did of those individual stocks, again, at any moment, I may decide to buy more or to sell based on what's happening with the general technicals, particularly around market breadth. So if the market breaks down further from here below supports, I can't be bullish on the market anymore, and I won't be as bullish on some of the positions I just talked about, okay? All right. So again, feel free to pop in questions or feedback. I will respond very quickly, particularly on any of the individual plays or shorts that I put up. If you have questions on those, just put your questions there and I'll know what context in which to respond. All right. Thanks for hanging in there this long, and I will see you another time. Take care, and thanks for checking this out.